Thank you very much. Distinguished guests, ladies and gentlemen, it is a great honor and it is a pleasure to be in this famous university. Now my 6-year-old daughter is learning Mandarin, but I will not try my Chinese on you. I shall discuss financial developments in Asia, and I'm more precisely going to focus on a few points in this very broad and interesting agenda. So first of all, I would like to review to some extent the effects of the crisis on financial systems around the world and contrast the experience of Asia with the one in the United States and in Europe in particular. And then I will have also a small discussion about international currencies, and in particular a discussion on the role of the United States and the dollar in the international monetary system versus some more potential future role for the RMB. Now we have lived through extremely interesting times. Unfortunately, we have faced a crisis that has been, in terms of its magnitude, both on the real economy, but also in terms of its shocks to the financial system. We have faced a crisis that was quasi-unprecedented for a long time. In fact, we have to go back to the Great Depression and to the 1930s to have anything similar in terms of macroeconomic and financial shock. So in 2008, back then, when after the failure of Lehman Brothers, when policymakers, central bankers around the world were looking at the unfolding of events, there was a strong feeling of panic as we were actually observing that the data on equity prices, but also the data on trade in goods and services, also the data on economic growth, were actually plunging at a speed and rate that was that was larger than what happened in the Great Depression. So there was really a widespread and common feeling shared among policymakers at the time, as expressed in the G20 meetings in various occasions, that some unprecedented policy response had to be made in order to face off to these big shocks. So what I have here on these slides are just the growth rates of advanced economies during this period, and you see this amazing slump in all the big areas in the world, as well as you see the effect of the slump on global trade, and in particular Asian exports. So it was a massive shock. As I said, unprecedented. You had to go back really to the Great Depression to see anything of this magnitude. Now, the crisis is still, as we talk, the crisis is still to some extent unfolding in some parts of the world, in particular in my part of the world, in Europe. And we are, however, looking also back and trying to analyze more what happened. And the more we look, I think, the more we have the feeling that a lot has to do with credit growth, a lot has to do with the behavior of financial markets and capital flows in the build-up of the crisis. And this is something that international economists, such as myself, have learned over and over again by observing emerging market crises, but also more recently advanced economies crisis, is that the role of excessive credit growth, the excessive volatility of credit, also of capital flows, we talk sometimes of capital flow bonanzas, plays a very important transmission channel during the build-up of crisis and during crisis time. When international liquidity is abundant, which is still the situation, which is definitely the situation we were in between 2003, say, and up to 2007, but we are still facing some of this aspect When international liquidity is abundant, capital flows are large. They are subject to very sharp reversions. We talk of sudden stop, and excessive domestic credit growth, which leads in some markets to asset prices which go way above fundamentals. We talk about bubbles, in particular in real estate markets. These are particularly damaging. And we have seen that over and over again. We have seen a global cycle of capital flows in the world economy. We have seen periods where international liquidity is very abundant, and we have seen these asset price bubbles forming and the devastation once they burst, especially when they were in real estate markets. Now, bank lending plays a very important role during this period because bank lending turned out to be particularly volatile and procyclical, as opposed, for example, to foreign direct investment. So what we have seen in particular in the euro area, and in Europe more generally, is a lot of flow going from countries with massive savings, current account surplus, into the periphery, what we call the periphery in Europe, which are Southern European economies in particular, and which have led to real estate investment booms and to diverging competitiveness and eventually financial meltdown. So this boom-bust cycle is in many ways actually reminiscent of what happened in Asia in 97-98. If you go back to the Asian financial crisis in Thailand, Indonesia, the Philippines, South Korea, in that period, we also had a boom-bust cycle with very inflated asset prices, in particular real estate prices, sharp withdrawing of capital, and eventually collapse with massive effect on the exchange rate, and then balance sheet crisis, as many people had borrowed in dollars, including corporations, and eventually bankruptcies. So this pattern is not a new pattern, and it repeats itself over the centuries. In fact, there is an interesting book by Ken Rogoff and Carmen Reinhardt who point out that, this time is different. No, it's 8 centuries of financial follies, and it's always the same pattern in economic history that you see when we talk about financial flows and financial crises. However, this time might be a bit different for Asia, fortunately. So here what I have is a map with banking crisis during the current crisis. So between 2008 and now we have seen a number of financial systems failing. And if you are in red on this map, it means that you did have some banking crisis. If you are very red, it means that you had really systemic crisis. So you don't want to be very red on that map. And as we see, the geographical location of most of the banking crises has been mostly towards the United States and Europe. In particular, we can see here in very red, we can see Iceland, we can see the UK, we can see Ireland, we can see Spain, we can see Italy, we can see actually Germany, which had some banking problems. And we see that Asia has been relatively spared. The second interesting development during this crisis, as opposed to the Asian crisis of 97-98, is that actually on the external side also things are quite different. So in 97-98, there was a lot of external borrowing by Thailand, by South Korea, by Indonesia, so that we had relatively large current account deficits prior to the crisis. We had overheating economies, fueled by credit growth, again, fueled by capital flows. That means current account deficit. And current account deficit is precisely when you borrow from the rest of the world in order to consume, in order to invest, in order to buy some more real estate. And during crisis, we see very sharp adjustments downwards, usually. So we see that the current account deficits have to turn towards zero or have to turn towards surplus even, as there is massive capital flight. And this is what happened in Asia with massive effects on the exchange rate in 97-98. However, this is not what happened this time, or not nearly as much. So the adjustment in 97-98 of the blue bars, you see that there the current account deficit had to turn into massive surpluses for a number of countries. That was certainly the case. The biggest blue bars are Malaysia, Thailand, Korea, etc. However, if we look at the current global crisis, which are the yellow bars, we see that nothing like that happened. It's actually New Zealand here which has the biggest adjustment, whereas if you look at China, or if you look at Malaysia or Singapore, it's actually the negative side. So we don't see at all an adjustment during this crisis. So that also means that the Asian economies have been a lot more resilient this time around. This is a message that we can also read in that map, where again, the color code of this map is always that you do not want to be too red. And if you are in the green side, it means you're doing better. So here, how do we explain this resilience of Asian financial system during the current crisis? Well, if we look at credit growth, as I mentioned, excess credit growth can be very damaging if it fuels real estate bubbles and other asset bubbles that it did during the current financial crisis. And here you see again that it's really the United States and Europe which might be at the center of the excess credit growth zone, while Asia is again relatively shielded from this. The same holds if we look at current account deficits. So again, this measure of borrowing, how much are you borrowing from the external world? If you borrow too much, after a while it becomes unsustainable. And we have this massive capital flight and adjustment that took place in Asia, that took place in 97-98, that took place in Latin America very much in the 1980s, that took place in Russia to some extent in 98. So we have here what we can see is that the large current account deficits, again, if you look for them, you're going to find them in the United States, you're going to find them in some of the European countries. You look at Spain, you look at Portugal, you look at Ireland, you look at Greece. However, Asia is on the other side of this one. Similarly, if you don't borrow too much and you don't build up too much your stock of external debt, and this is therefore no surprise that this other graph is telling you the same stories. If we look at the net external debt as a percentage of gross domestic product, which is the stock of liabilities that you owe to the external world, you see that, again, the United States, some countries in Europe are in the red, whereas we have a lot less external liabilities in Asia. So all these factors put together may explain the resilience in this current crisis, while this time it was actually somewhat different in Asia, the current crisis and the resilience of Asia during the current financial shock. However, so I think it's one has really to try hard not to be too complacent with these issues. It is again a lesson that we learn that when there are big financial cycles, one has to monitor extremely closely credit growth and capital flows. And with the development of financial markets in Asia, which I will talk about in a few seconds, it is likely that in the future there will be more pressure for liberalizations or various capital accounts. There will be more pressure for more capital flows, and eventually there will be a lot more procyclicality again in the flows, which will be entering into China, for example. So what I think this crisis has shown to Europeans is that this boom-bust cycle, we call it boom-bust cycle in asset prices, this boom-bust cycle in credit, was not really something that was only for emerging markets. It was not only Latin America of the 80s, it was not only Asia of the 1990s, but it was really something that applied to everyone. And even if one thought one had good regulation, actually, no. I think one of the main lessons of the crisis has been indeed that central banks had forgotten their role of financial stability and had focused too much on inflation targeting. Now, if we think about how to intervene when there is excess credit growth, when capital flows become too important, when we see asset prices getting out of line, I think it is very important for central bankers around the world, and that applies especially for countries who are on the way to liberalizing their capital accounts, such as China. It is very important to act quickly when they see excess credit growth, when they see real estate bubble forming, and not to wait to be sure that we are in a situation of a bubble. In other words, when you see a massive bubble developing like in Spain or like in Ireland, if you wait and if you see prices which have gone up fivefold in the space of 10 years, you're going to be sure it's a bubble, but it's going to be too late. So central bankers have to act as soon as they can establish by doing what we call stress testing of a financial system. That is to say, by simulating some shocks on the balance sheet of their financial intermediaries or of their companies, by simulating the effect of the shocks and seeing if with reasonable shocks which could happen with some degree of probability, which is not totally out of line with the past, then balance sheet could be put in danger by too much growth in asset prices. This is something that central banks have failed to do in the developed world, in the development towards the crisis of 2007. They were focusing on inflation targeting, and they were not stress testing balance sheet of financial intermediaries, with the results that we have observed. So why do I think it's especially relevant for Asia and for China to think about these issues well ahead? Because if we look at the current situation of the Asian financial sector, in absolute mass, it is still small as a share of the financial sector in the whole world, because it is starting from a relatively low base, but it is growing very quickly. So if we look at the share of advanced Asia or emerging Asia in banking system assets, which is the pie chart you have here, you see that it is still below really probably the economic mass of Asia in the world. However, and if you look in terms of percent of GDP of some of the financial sector market development, you see that there has been recently quite a bit of increase. But I think what is really striking about what's happening in Asia is that the financial sector will be growing, has been growing recently, and will be growing very quickly in the coming years. So here I have this striking chart of the daily turnover of over-the-counter interest derivatives. And if we look at the growth of the derivatives market, so be careful, there are two scales here. On the left scale, you see the daily turnover of OTC interest derivatives for that's the global market. So you see this huge number, 3 trillion. We are going towards 3 trillion in terms of derivative trading, which is just enormous. And Asia is a lot smaller. It's the red line, so we are only in the 100 billion, 150 billion, etc. But you see the rate at which it's growing. It's extremely quick. So all these concerns that I outlined in the case of the European financial system, or in the case of the US financial system, I think are becoming increasingly relevant for Asia, and in particular for China, and will be in the coming years, and therefore one has to look ahead. And not to forget this monitoring of balance sheets, this stress testing of the financial sector that, unfortunately, central banks in the advanced economies had forgotten between 2003 and 2007, and actually also before. So looking forward, indeed the share of the financial markets in Asia and in the whole world is still small but growing quickly. Now what does that mean for the international monetary system? So it is pretty clear that if we take measures right now about currency hegemony and what is the main international currency in practically everything, foreign exchange transactions, pegging in terms of issuing of financial assets, in terms of trade invoicing. Of course, it's the United States, it's the dollar, right? The dollar has inherited a very important role since the Bretton Woods Agreement in 1944, and it has a quasi-monopoly as an international currency. However, as we have seen in history, with the transition between the pound sterling and the dollar, which occurred sometime in the 20th century, when the economic mass of a country is growing in the world economy, when a country becomes a big trading power, like the United States did, and effectively overtook Britain sometime in the 20th century, at the beginning of the 20th century, between the world wars. And after a while, and with a lag, it does not happen quickly, because there's a lot of inertia built in this structure of international currencies. After a while, the currency of the dominant trader tends to displace the former hegemon. So we have seen that with the United States dollar displacing the sterling, and so we can actually conjecture that given the trend in the real economy, it is reasonable to think that at some point, not quickly, the Chinese yuan, the RMB, will effectively be a challenger to the dollar. However, so far there are at least three fundamental obstacles to the international currency status for the RMB. The first one is, of course, still some inconvertibility restrictions in the capital accounts. You cannot have an international currency if you cannot freely trade it. The second one is the lack of large, liquid, and efficient market in RMB-denominated securities. And the third one is still a lack of institutional infrastructure for the financial sector, which is developing, but it's still not there. So if we look for the moment at the scorecard for the internationalization of the Chinese yuan, well, we're still at a relatively low base. The new offshore Hong Kong market does only about, very small amount of the global foreign exchange transactions. The London trading in all RMB FX products is only a very small share of all the London FX trading. There is some move towards more trade invoicing in RMB, but this is still a relatively minor aspect of international currency status. And we see more of countries kind of pegging towards the RMB, but this too is relatively minor. So we are still not there in terms of an international development or really a challenge of the role of the RMB vis-à-vis the dollar. However, if a number of things happen, I think it is reasonable to conjecture, given the current trends, if we have in particular more efficient spot foreign exchange markets, more liquid government securities markets open to non-residents in particular, that it would have a very important effect for the internationalization, a very important effect for the internationalization of the RMB. Now, to conclude, I would therefore say that it's quite important what we saw. This crisis was a very, and is still an extremely serious crisis, comparable only to the Great Depression. And maybe for the first time, we saw that Asia was really had managed to be sheltered from a lot of the big shock. It was not completely sheltered, of course, but usually emerging markets are much more volatile than advanced economies, are hit very hard during crisis, and this time around we've seen a different pattern for Asia. I believe it was linked to the pattern of current accounts, the pattern of credit growth that I described with all the world maps. I also believe that given the current trend in the world economy, that means there are huge opportunities for financial sector development and further financial account openness in Asia, in particular in China, and that this, however, should be monitored very, very closely to avoid repeating the mistake that actually advanced economies did, and which led to the current crisis. And that all that put together, once there are some policy changes and institutional changes made, I think the Chinese currency has certainly the potential to become a major international currency. However, if history is of any guide, this will not happen tomorrow. Thank you very much.